Yeah, how? Oh! Luna, come on, say hi to everybody. Say hi to everybody. We're gonna do an analysis on LiteCoin. Come on. Don't you try to bite me, girl. I'll have you for supper tonight. You know that I'll eat you. I'll eat you. Come on. Say hello. Whoa, don't you try to bite me. Okay, that's all that you guys are gonna get from my dog today. She's feeling a little bit feisty right now, if you guys can't tell. So do you guys hear me? Am I live? Hello everybody. Good morning, good evening, good afternoon everybody, depending on where you are in the world. Okay, I just had my morning coffee, guys, and I feel like I love my morning coffee, you know? It's like the best thing in the world. I like my coffee like how I like my women. Not yellow, not black. I like it very white, you know? So make sure you guys stick to the same flavor of coffee as you do for your women. I'm wearing, what color underwear am I wearing right now? They're blue. They're blue. So I prepared a really good outline for you guys, and it's going to be very informative. I've actually planned this. Oh my goodness, guys, Eric Cho is here. Everybody say hi to Erica. Hello, Erica. How are you doing today, Erica? I hope you're doing really good today. I haven't seen you in a long time, Erica. So Eric was panicking last night, if you guys don't know, okay? We were having a conversation like at 2, 3 in the morning. And I'm like, Eric, you gotta stick to this plan for LiteCoin because it's gonna do some pretty nice things. And Eric's like, no, screw this. I'm gonna get stopped out. That he decides to close his position, right? And then now look at where we are for LiteCoin, okay? So him and Johnny actually, both of them were actually panicking last night. And I kept telling them that I'm gonna keep buying more. I'm gonna buy tons because, well, it's important to take advantage of these things. So let's go over LiteCoin really quickly. I'm going to go over some really detailed risk to reward scenarios for you guys, and I want to talk generally about trader mentality as well. One thing that you guys need to understand about trading is that it's not a sprint, right? It's a marathon, and we have to focus on winning over time, and that's how we define ourselves as a trader. No trader will ever be 100% or even 90% or even 80% or even 70%. Good traders are like 60, 50%. And what we focus on is making sure that we win over time. So you guys need to get out of this mentality of going big on one single play. Because if you try to go big on one single play only, you're going to burn yourselves out. And you got to make sure that you focus on winning over time, okay? And we're going to go over general and very rhetoric things as well, such as how to derive targets. I'm sure that a lot of you guys probably entered right here, which I'm very happy and proud of you guys that you did. But now, where are targets? How do we obtain these targets? Where are they from? Are they pulled out of my dog's butt? Are they just pulled out of thin air, right? So let's go over Elliott wave first of all. Elliott wave are basically waves that are found everywhere in all time frames. They will ebb and they'll flow regardless of what time frame they're in. And you're also going to see Elliott waves on smaller degrees as well. You're going to see it on very small degrees, and they just keep going up and up and up and up and up. So let's just say that we first of all have a 5-wave degree, right? Going upwards like that. What we would generally like to see typically is an ABC type of correction like that. And the most amazing thing in nature that I always say to people is that this golden ratio is the most magical number in the universe. It's part of the Fibonacci sequence of numbers. And these numbers, Luna, you're interrupting me. It's my show, okay? If you want your own show, go make your own show, Luna. This is my show that I'm live streaming right now. So that's enough out of you before I eat you for dinner tonight. And this is the last time I'm gonna threaten you to not interrupt me, okay? Do you understand? Okay, sorry about that. My dog is really, I'm gonna make her for dinner one night and she's not even gonna know that she's dinner, okay? So we like to see this golden ratio right here hit. This is where a target is usually going to be set off for a lot of algorithms, and people will generally rush in. It's found everywhere in the universe. It's going to be found from the way the galaxies in the universe is spiraled, to the way our bodies are proportional, to the way seashells are shaped, to the way architects design buildings, to the way our DNA is helix in a coil. And it's also found in the stocks as well, in charts, okay? So what we would like to generally see is a 1-to-1 extension ratio like this. And this is, okay, that alert needs to stop going off. We like to see a really beautiful one-to-one extension. So if we ever see something like this, where we get an ABC that actually falls with a 100% extension directly into this Fibonacci number right here, say 618 to 0.65, that is literally the golden ticket. This is as ideal as it would ever get in the stock market. And if you guys ever see something like that, you would be crazy not to enter it. And we're going to do a detailed Elliott wave count for here first of all. We see this clearly as 1, as 2, as 3, 4, and 5. Pat me on the back, I can count to 5. Heyo. And then what we see here is A, B, and we see this as C right there. And we also see 5 perfect waves that have come down as well, right? Beautiful, like that. And all of these targets could have been derived easily as well by taking Fibonacci. So just make sure you grab your Fibonacci tool, just like that. So what a lot of people do is they take a short position right here on the C. So as soon as waves 1 and 2 form, they will wait until this wave 2 coming down to start wave 3 breaks the wave 1 low. So then you enter into a short position, and where you would like to target is right here. So it's really important that we know why we're entering a position and also where we are targeting, right? So I bet you a lot of you guys watching this right now have no idea how to derive targets, and you're just sitting there and just waiting, right? And you're like, okay, I'll take my targets or I'll take my profit at random times. But that's not a really good way to trade. You have to understand why you went into it, whereabouts you're going, and you have to have your game plan set in motion even before you enter this trade. And that is what's going to make you a successful trader over time, okay? So let's say you entered a short position there. The first natural target would be to target a one-to-one extension right here. And surely enough, we see that it hits it with precision right there. And then another target that we could have hit was a 1618 extension. And boom, both of these targets were nailed with precision. So now that we have our ABC completely drawn in here, right, we're going to take a one-to-one extension. We could have easily derived as soon as waves A and B formed, what you would do is you would just take, that's the wrong tool, you would take your Fibonacci extension tool just like that, and you would say to yourself, okay, well, as soon as this wave formed as well, waves 1 and 2, we're going to say, is it possible that a one-to-one extension of AB could also hit a 1618 extension of waves 1 and 2? And surely enough, we actually see it right here. It coincides. I call this a double correlation method. I might have invented that. I don't know if I have, but that's a pretty magical number, right? So not only do we see the one-to-one extension hit right around here, but what we also see is this Fibonacci right here. The Fibonacci golden pocket with the one-to-one extension from A to B is also directly in between the golden pocket. And this right here, my friends, is where you should have entered the trade. I've been talking about it for days now, and it's literally the most magical thing. And if you guys had entered a trade from here, you would be up right now about 12%. That's a pretty big number, 12%, right? Now, of course, I remember last week, and I hold myself 100% accountable that, you know, maybe we're going to get another wave starting from somewhere up there to hit, I think it was 260 that I was saying, sure, that's okay. We got stopped out and it didn't happen, but that's completely understandable as well. Now, do you guys know where the next targets are? Real question. Any of you guys know where these next targets are and how to derive them? Whoever answers it first gets a cookie. Nobody knows how to derive targets? I know Eric knows. He's not allowed to answer shit. Okay, so what we like to do is we like to take, first of all, our extensions just for the wave B right here, first of all. So a very logical place to assume that it could hit, it's really going to depend on your tolerance for pain as well and how aggressive you're being. But generally, if you guys saw, we had some resistance over here. Take a look, okay? Take a look right here. We had some resistance right there. Do you see this wick? It hit the 236 Fibonacci level, right? it literally just hit the 236 Fibonacci level, and that acted as a resistance right here. And what we see is it's flying through the 236 Fibonacci number now. So the next logical target would be a combination of the next Fibonacci level, right? You take the next Fibonacci level, which also happens to be the 55 moving average. So these are two confluent zones that will act as a very relevant resistance. So the next target for Litecoin is literally $186. Now, you'll always see some sort of resistance at these critical points. People will see what we're all seeing together right now, right? And because we all see it, you can guarantee that some profits will be taken over here. Maybe it'll downtrend a little bit, and then the next relevant point would be up here. And the next relevant point is up there. So this is how we're using Fibonacci extensions, or Fibonacci excuse me, retracements to derive targets. Does that make sense to you guys? So let's say that we're going to go into a risk to reward setup right now. Do you guys know what risk to reward setup is? I'm going to explain to you guys on a mathematical level, Asian level mathematics, what Fibonacci, what risk to reward is. So I've been preaching for a few days now to enter at 160. And if you guys entered at 160, you guys must be, whew, you guys are going to be super happy, because I think that Litecoin is going to be the coin of the month. It's going to carry a lot of other coins. So let's say you even targeted a dead cat bounce level because you were super pessimistic, like how I always trade. I'm a very pessimistic trader, okay? If you guys actually took this trade right here, you would be at an 8.92 risk to reward setup. That is unbelievable. So what risk to reward refers to is this, okay? You're gonna take your target minus your entry price, all divided by your entry price minus stop loss. And what you would like to get is a very positive number that's higher than 1, preferably higher than 2. So what it means is you have a chance to win a specific amount more than you lose. Are you guys following? If you guys have questions about this, Eric already beat me in it, okay? Eric already beat me in the 50K trading challenge. I'm just gonna give Eric fake props right now, but don't tell him right now. Hey Val, are you in this? Val and I are okay, by the way, okay guys? Hi Lisa. How are you, Lisa? Ohayo gozaimasu. Nihonjin de wa arimasen. Demo nihongo ga skoshi wakarimasu. Mada jouzu ja arimasen. Did you understand what I said, Lisa? So that's a little bit of Japanese flirting for you. O genki desu ka? Lisa, o genki desu ka? Lisa! Okay, you guys have to understand that risk to reward, okay? Here we have an 8.92 risk to reward. Now I want to explain to you guys on a very detailed level what risk to reward is. So let's say, just as an example, you guys were interested in Litecoin. Whoops, you guys not see that in the background? Don't you guys dare rewind that video and see my desktop photo. That's for my eyes only, in case you guys saw a glimpse of that, okay? So let's say that you guys took my advice and you were laddering all the way from 170, okay? You were laddering at 170, 167.5, 165, 162.5, and all the way to 160. So you've now made 5 buys. This is what we call dollar cost averaging. Dollar cost averaging allows you to slowly micro buy near the bottom as it gets lower and lower when you're expecting a bounce. So what this does is it allows you to not catch the bottom, but it allows you to get the best possible price depending on how far. Oh, there's Val coins. Hi Val. Val, I haven't changed my desktop background photo yet, so I might show a glimpse of it by accident. So I hope you're not mad at me, Val, if it does show just slightly by accident. It's your fault for sending me it, okay? It's a very private photo and it is not for you guys to see, okay? So let's talk about this scenario now of laddering 5 times. Let's say you laddered 5 times and you bought 5 at 170, 5 at 167.5, 10 at 165, 10 at 162.5, 20 at 160 as it keeps going lower and lower. What you would actually get is you would get a base price now of 163.25, right? So 163.25. And now we're going to assume that you guys are targeting, say, 186 right here, okay? 180. Actually, we'll just say 200. We'll say we'll go to like near the 0.5 Fibonacci level at 200 because I already have it all here. So you guys need to understand what risk to reward is. What risk to reward does is it removes the emotions out of trading. I know you guys are probably emotional traders where you're like a train wreck when things slightly go south, right? What risk to reward does is it prevents you from having a panic or FOMO because you actually have a game plan going on already. You don't really need to worry about the risk, and you can just toss your emotions out the window and you can just focus specifically on what's at hand, which is your risk to reward setup with your exact setup right here, defining all of the parameters. So let's just say that you're playing a flip a coin scenario out of 10 games, okay? Where you have a 50% chance to win and a 50% chance to lose. So your buddy comes up to you and he or she is like, okay, let's flip a coin right now, 50-50%, okay? And we're gonna go with the risk to reward setup right here of 6.3 to 1. That's what we're going, okay? 6.3 to 1. This is the risk to reward exact scenario that I have set up, which is my risk to reward for LiteCoin right now because I'm targeting roughly $200, okay? So you have a chance to win based on your position size of $8,162, which is also shown right here, okay? So now if you have a possible chance to win 22.47%, and your stop loss is about 157.5, then you have a chance to lose 3.56%. So now, if you follow this simple formula right here of flipping a coin, and your buddy says to you, okay, every time you win, I'm gonna pay you 6.3 times more than you actually lose, okay? So would you guys be crazy to turn down this trade? Yeah, you'd be pretty crazy to turn down this trade because over time, over 10 games, I'm trying to show you guys that Val's my private student. She's my probably only student that I'm gonna ever take on. Yeah. Oh, don't be dirty, Richie. That's my girl. Don't be dirty with her. Val's awesome person. So yeah. The only person I would share Val coins with, who I would let have in on that ICO, is probably Eric Cho. Because Val probably wouldn't even be able to tell us apart since we're both Asians. Because to Val, I'm sure that every Asian person looks the exact same, right, Val? I'm just joking, Val. I'm sure you can tell me apart. As long as I have my name tag on. So, now you got a chance to win 22.47% of your actual position size, which is 1,834. Now for your stop loss at 3.56% loss, you actually have a chance to lose $290 if you get stopped out. So if assuming you're calling it a 50% win and 50% loss, so if you take your win per game at over 5 games, that would be $9,171, right? Now, if you lose $290 per game over 5 games, that's now $1,453. This is the most boring part of crypto, guys. Everybody likes to skip over this crap because they find it really useless, but this is the crap that I thrive on, and this is what's made me a lot of money down the road, right? So now if you take your net profit over 10 games, well, your 5 wins profit minus your 5 losses profit, that's now $7,717. So this is how we try to think of it over the course of 10 possible games for you guys to be profitable. And another formula that I like to use often is called the win expectancy formula. Now this is a formula that gives you an average gauge based on how often you win versus how often you lose. So the win expectancy formula, you take your average win multiplied by your average win dollar multiplied your average win percentage minus your average loss dollar multiplied by your average loss percentage. So if you take these formulas out, you know, you're taking $9,171, right? And you're winning 50% of the time. And then you're taking your your $2,090 there, and you take 50% of that. So if you see it over 10 games, regardless of if you win or lose, you're still gonna come out ahead with $771 over time. Suzanne, this stuff is all math, and there's only 2 types of people that's gonna get this kind of math right off the hop. One is if you're Asian, like Eric Cho and I, and two, if you're white or any other ethnicity and you actually study a lot. You either have it in your genes or you don't. Now, this is Asian level mathematics. If you guys can't do Asian level mathematics, I really recommend that you guys go find a tiny little Chinese guy or a tiny little Korean guy, like Eric Cho, for example, and you stick him in your pocket, okay? You just stick this little Asian dude in your pocket, and every time you need to do risk to reward, just pull him out of your pocket and tell him, okay, I'm gonna pay you with rice. You gotta do some mathematics for me, okay? But all joking aside, guys, you have to understand how important this is. Like, I kid you not that 99% of all traders will fail. And they're gonna fail because they simply don't understand this simple concept of risk to reward. And they're the videos that actually get me the least amount of views. But you guys really need to, if you guys are serious about trading, like, I cannot emphasize this enough. Like, even my dog understands this, guys, and she's super retarded. She's the most retarded dog ever, and she can do this math. So you guys need to understand that this is really important, okay? You guys need to, I'm gonna put this link. I care so much about you guys being successful that I'm gonna upload this, okay? There will be no viruses on it whatsoever. There will be no viruses on it whatsoever. So just download it. Please review this. I even have like a Steemit link that goes over how to use this, use it very well, okay? I just want you guys to understand what price averaging is, dollar cost averaging, using a win expectancy formula to focus on winning over time, and using risk to reward. The reason why this was brought up is because a lot of people have been like, oh, I took one of Sir Mr. Fibonacci's calls and I lost really big on it. Well, that's not cool that you guys are losing big on this and you're focusing on one trade only. You got to make sure that you focus on it over time. And someone has asked me before, like, what is this up and what is this down? This is simply taking into a small market execution fee in case I have to do it of 0.04%. So there's a really good Steemit post that will go through all of this as well. So anyways, I really hope that this covers this. Like, this is something that I actually want you guys to get really good at. So please direct message me. I'm no financial consultant of yours, okay? Those are the kind of questions I don't really respond to, but I will respond to if you guys have risk to reward questions, because I'm Asian and I love mathematics and I love talking about the risk to reward behind each one. And every time I enter a trade, I think about the risk. You should have seen Eric and I last night in our chat. Eric is like, damn it, I got stopped out. Damn it, I got stopped out again. And Johnny's like, I got stopped out. We're all getting stopped out, but it's really important for us to get stopped out because it's what minimizes our loss. If you guys are playing and you're just hoping that the market turns when it actually goes against you guys are definitely not going to be good traders. I just want to see you guys exercise really good habits, and risk to reward is something you guys definitely need to learn. I go over it in many of my Steemit videos, so you guys can review all of that as well. Okay, and someone asked me before, what is shorting? Did you guys know how to make money in a bear market when it shorts? Johnny is altcoin crypto guy, okay? He's that altcoin guy. I'll show you guys who he is. He's Johnny. He's old man Johnny. He's that 59-year-old guy that still trades. You know, old man Johnny? You guys should follow him. Old man Johnny, that's what I call him. This is right here. You guys should follow him. We have a little private chat going on there, okay? Hey, look, Val's here. Hi, Val. Hello, Val. So, yeah, that's Johnny. He's a really cool guy to be following. So, I want to also explain to you guys what shorting is, okay? A lot of people think that shorting... There's no girl on my desktop. No, if I showed you guys the photo, she'd probably break up with me, and I don't want to be single, you know. So yeah. So shorting, a lot of people think that shorting simply refers to selling and then buying cheaper. That is not shorting whatsoever. Okay, you guys know what a long is. Okay, you guys know what long is. Long is basically, you know, let's say you bought a Bitcoin at $10,000 and then you sold it at $11,000. Well, your profit is going to be $1,000. This is what the typical definition of a long is, where you're buying it cheap and you're hoping that the market goes up, and then you sell it as the market goes up. But shorting is really different. Shorting has to do with borrowing, margin, and leveraging. So every single exchange that allows margin will also have a funding account, okay? So on bitfinex, for example, myself, I contribute to the funding account because I like to see passive income grow. So every time you guys are entering a short position or a leveraged position, honestly, I couldn't tell you, Pasoidati, how do you set a stop loss and limit so you can recover on Binance? I haven't traded on Binance much whatsoever. I would recommend asking Eric Cho that. Tell Eric Cho that you need help with that, and he'll gladly explain it to you because he's more of a Binance expert. I'm more of a bitfinex expert. That's where my expertise comes in right there. You guys just want to see my desktop photo. You guys are not allowed to see my desktop photo. Okay, I got probably change it right away. No, I'm not showing you guys my desktop photo, okay? It's a little bit too it's a little bit too triple X rated right now. So let's say now I've contributed to the funding account, right? And you guys are entering a short position. You are technically borrowing from this person who is funding your margin account. So you have to think of it that way. So what shorting refers to is you're betting that the market is going down. You're basically being a butthole and you're not being optimistic. You're being pessimistic and you're saying, I'm gonna try to profit when the money goes down. So let's say you decide to short a Bitcoin at $10,000. You're essentially borrowing one Bitcoin from someone to sell to the open market, right? And now that you have sold it, you've shorted your position now is what they're referring to. And you're betting that the market goes down. Let's say you're guessing that it goes to $9,000 and it actually gets to $9,000, right? And this is for one Bitcoin, just as an example. So now your profit would be $1,000, but we have to understand that you're betting one Bitcoin that you shorted at $10,000, but you still gotta pay back the exchange or the person that this is all behind the scenes. You're paying back the one person that you borrowed the Bitcoin from. So you wanna buy back your Bitcoin at a cheaper price where you're profiting on the difference. So that's what shorting is. So now you've bought one Bitcoin back at $9,000, but you originally paid $10,000, right? So now you're profiting $1,000. And that's how you make profit on a downtrend. I'm a shorter. I'm a bear at heart, guys. You guys have all seen my bear posts. I specialize in shorting with RSI, and 80% of my income actually comes from shorting the market because I take advantage of the fear in the market, or the greed in the market rather. I find that there's so much greed in the market and it prevails from the fear. More people I find will end up buying to spike up my limit orders and put me in a really good position for shorting. Oh yeah, Mohammed, I'm a very pessimistic trader. I don't give a crap about the market going up. In fact, if Bitcoin went to $1, I'd probably be very happy. I'd sell my dog. I'd probably sell my girlfriend, Val. I'm just kidding, Val. I love you. And then I'd probably mortgage my condo, you know, or I'd sell my condo and I would just short the crap out of it if I felt it was going to go to $1. So it's really important to understand the concept of going long and going short because you can make money in both markets. The people that are crying about Bitcoin tanking are most likely the people that really don't understand the shorting concept. What exchanges can I short on? I personally don't know any other exchanges other than Poloniex, Bitfinex, and I think BitMEX as well, and CMEX. I don't think you can short on Binance. They don't have any leveraging whatsoever. Okay, Kraken as well. There you go. Yeah. So if you guys actually understand shorting, you can make a lot of money on the downtrends as well. But it's not for the faint of heart, okay? I'm going to show you guys my Steemit post here. I don't like talking about Steemit. Don't forget, guys, it's still on the table. If anybody ever gets access to my Steemit account, there's $2,000 in there. Oh, it just keeps dropping for some reason, because Steam's going down. There's like another $1,000 of unclaimed. You guys can keep the $2,000. In fact, if you give me back the account, I'll probably give you another $2,000. Just give me the account back, okay? So you can make $4,000 if you guys claim my Steemit account over here, all right? Okay, so I have like a video here like that explains shorting as well, okay? So make sure you guys try to go over it in depth here. That's not the one. Right here, it's lesson number 6, margin trading long. It has even more mathematics involved in it as well. So hopefully that can help you guys over time so you can understand how shorting is made. And if you guys actually go to my YouTube and you look at my live trading videos, I'll just show you guys really quickly as well. If you go to my playlist, if you guys really want to learn how to short like a boss, because all of my videos in my live trades are literally all shorting because I'm a super bear at heart. Try and be really careful not to show my desktop because Val's gonna get so mad at me, guys. So every single one of these videos, I don't think I've even gone long on it, like more than 2 or 3 tutorials, right? And I'd love to take advantage of volatility in the market when we've reached a very specific point. So you guys can go over my live videos where I narrate them. I'm talking about level 2 and RSI and scalping, right? And the majority of it is all shorting. Look at short, 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 right? It's how to play Bitcoin when it tanks, right? Shorting, shorting some more, shorting some more, shorting some more. So I really do love to short, and it's definitely one of my specialties. I don't think, honestly, if Tony Bays even accepted my $50,000 challenge, which was more so a joke, him and I don't have time for that. He's too busy podcasting. I'm way too busy like trying to help you guys out because you guys are my baby whales as well. Okay, Val, no, I'm sorry. Hey, Sam, if you guys don't follow this guy, you guys gotta follow him, okay? If you guys don't know who he is, whoa, did I show? No, I didn't show the desktop. You guys have to make sure that you guys follow this guy right here, Trade Devil. Eric Cho and I feel like an idiot whenever we look at this technical analysis, right? And his name is Sam, and he's a very, very talented Elliott Wave technician. He calls himself an Elliott Wave technician. I call him an Elliott Waves Elliottician. Elliottician just sounds much more cool, right? Elliottician, you know, like esthetician, play on words. So yeah. So yeah, make sure you guys follow Trade Devil. He's really, really amazing, and he knows a lot about algorithms. And I kid you not that I probably think he's probably the guy's probably a fucking computer. He's probably a friggin' computer. So anyways, I just needed to go over a lot of the basics with just risk to reward. So please commit, guys, to learning a lot about this, okay? It's definitely one of the most important criterias of becoming a good trader. And look at this, guys. We are flying through right now. We are just soaring right now. R. Kelly would say, I believe I can fly. I believe I can reach the sky. I think about 3-2 Fibonacci night and day. Spread my wings and I probably want to hit it, baby. So we're probably going to find a lot of resistance here. So make sure you guys understand that these fib levels are going to act as a really hard resistance. And if you also take a look at this zone right here, right? If you take a look at this previous support, it's actually going to act as a really hard resistance as well. We got a little bit of pressure right here, right, as a resistance, not much, but this is going to be a critical point, guys, like right around where we're going to get up to, like the 382 Fibonacci level. So myself, definitely, I like to play the ladder game. Make sure you guys understand that, yes, we dollar cost average our buys, right, as it goes down, because we ladder it and ladder it and ladder it, and nobody can ever catch the bottom. And if anyone ever says that they caught the very bottom, there's only one thing that can happen. Okay, one of two things. One, you're either Eric Cho, or two, you're either Sam, Trading Devil. Those are the only two people that can catch the bottom. Okay, that's a fact. So make sure you guys focus on laddering your buys as it goes down. That's how you get the best possible price, and you average it out. Now, another thing to take note of is as you go up on the uptrend, when you're reaching key resistance areas as well, if you guys don't see, or if you do see a lot of resistance, consider taking some profit. Take a percentage of your profit, however you guys would like to define it. You can also raise your stop loss as well, right? Then you set a new target perhaps, right? Redefine your targets depending on your Fibonacci levels, and you have a new risk to reward setup as well. So it eventually gets to the point where it's almost guaranteed that you're not going to lose money because you're taking some money from the house. Does that make sense? If you guys take some profit, okay, you're taking some profit, you're playing with house money now, and then if you do take some of your profits, you now have house money, you're guaranteeing securing some of your profit, and then perhaps on a dip, right? On a dip, you guys can add more. So it's a win-win situation. Might even reduce your exposure to the market as well, like depending on how you see it. But all in all, laddering your buys is as important as laddering your profits. And once you guys get over this hump of the basics of trading, it's going to be really easy for you guys to profit over time. And this right here, I've seen Sam's videos as well. What I like to do is like Sam Trading Devil, is I like to do my TA first, and then I like to watch his videos or other really talented Elliott Wave technicians, because then it keeps you very unbiased. So yes, absolutely, Ryan Peters, you can do Elliott Wave on anything, and it just comes down to how much time did you actually put into studying Elliott Wave. There's a lot of people who will knock on Elliott Wave, but we don't treat it as something that's a Bible. Excuse me for using religious references there, I didn't mean to be rude. But you can't use it as your go-to tool. Think of trading as, you know, being an Asian ninja. And as an Asian ninja, you have many tools and many skills and many weapons. And the more tools and skills that you have, the more you can employ depending on what situation you're in to find something called confluence. So you use Elliott Wave to increase the probabilities and to help you and to assist when to enter a trade, if that makes sense. So you can't really rely on Elliott Wave entirely right now, 100%. You combine it with other tools as well. So I think I've defined a lot of the targets right here. The one major target that we'll probably find resistance is definitely this 382 level, right around 185. But as you guys can see, we're soaring right now. We're looking really good. If you guys look on all of my charts right here on a 30-minute chart here, just as an example, what coin is doing the best, guys, okay? I like to use Fibonacci numbers, exponential moving average, 8, 13, 21, and 55. These are all part of the Fibonacci sequence of numbers, right? If you guys take a look at XRP, it's actually gaining ground right now. EOS, yeah, not really cool right now, EOS, okay? It can't even touch the 55 EMA, okay? It's definitely not singing any R. Kelly songs right now. If we look at, whoa, hallelujah, Val, we're taking a vacation. I'm so up on Neo right now, guys, now. Yeah, I've been buying Neo since under 85, okay? And then Eric Cho is like, no, I'm not touching that right now. I'm like, okay, Eric, you're lost, Erica. Why don't you climb back into that little corner there, Erica? So it's been a really good day. I think I'm up, I don't know, over 10, 15K in the past few days, just playing it properly. So it's been a good day. So anyways, if you guys look at the moving average, 55, Bitcoin's really struggling right now. So anybody who says that every single coin is actually corresponding to Bitcoin directly, that's wrong. Okay, guys? It's completely wrong. Take a look at here. Bitcoin, someone said to me, well, doesn't every coin sing to the whistle or follow the tune of Bitcoin? No, it doesn't, okay? December 17 was a very prominent day because I was AFK and I was ready to short it, but I took all of December off because my grandma passed away there, if you guys remember. So it was sad altogether, you know? Grandma passed away, I couldn't short Bitcoin as well. So two of the most brutal things in life happened on the same day, basically. So it kind of took life, put it on the back seat there. But Bitcoin fell on December 17. Well, do you guys see coins like Ripple, for example? Okay, December 17, Ripple went on a tear. EOS went on a tear, right? Every single coin basically went on a lot of coins rather went on a tear. So yeah. So anyways, what I was saying was LiteCoin is actually doing really well right now according to the 55 EMA and how far we're breaking above it, right? On the 30-minute chart. So you guys look at the 30-minute chart here. LiteCoin is on a tear. My two coin picks for the month are Neo, where I expected to hit some pretty big numbers of, you guys know my targets. It's over $300 by the end of May. Neo is actually doing fantastic as well. It's doing so good that Val and I are probably going to take a vacation next month. Can you guys convince Val to come to Thailand with me? Can you guys all write in chat? Val, go to Thailand with Philicon. You guys got to convince her, okay? She doesn't want to go. But I'm like, Val, we got to come to Thailand, you know? And Eric doesn't want to go either, you know? Come on, Val, let's go to Thailand. I'm asking you publicly to come right now. We'll have so much fun there. We'll go to Phuket. We'll meet all these Thai boys. You know, it's going to be so fun. Me love you long time. You know what I'm saying, baby?
Baby, I not know why you don't want to go. Baby, come with me. It'd be so fun.
Okay, anyways, I think you guys get my point of where these targets are. Rewind the video if you guys are not sure where these specific targets are, and also start practicing drawing your Fibonacci combined with relevant resistance areas that we've seen in the past already, okay? So I'm going to take some questions now. You guys have any questions that I can answer? I've had a lot of coffee. I feel like I've had a lot of coffee and I feel great. Woo! How come you're drawing? Because I'm conservative. You've drawn, okay, this is a good question, Ryan Peters. How come you've drawn your swing high? I gotta rewind it. Swing high from point B and not from point 5. Because think of it like this, okay? Really freaking awesome question, all right? Why not from point 5? So let's say we're taking our Fibonacci going like this. This is the mistake that a lot of people make, okay? And I don't want you guys to make this mistake because I've done it many times before. So if you're taking your Fibonacci for wave 2, take it for only wave 1. Please do that, okay? If you're taking your Fibonacci for wave 4, take it for only wave 3. But if you guys now take your Fibonacci for all of wave 5 and you're like, okay, I'm just gonna buy right here at, you know, near the golden ratio zone, enjoy losing your money, because guys like Sam and Eric will take all of your money if you guys draw it like that. Amateur mistake. Make sure to take your Fibonacci range for all of the entire structure, because you need to see it like that, okay? Now, in all of wave 1 here, you're also gonna see 5 small subwaves, okay? Now let me ask you guys this rhetorical question. If you're seeing 5 subwaves in this wave 1 right here, what is the difference than seeing 5 subwaves inside of this one right here as well? Does that make sense now? This is why I'm going to take my Fibonacci on a conservative level from where it actually began over here. Am I on Bitcoin? I'm on Bitcoin. I don't want to be on. Who cares about Bitcoin right now? Bitcoin, what? So this is why I'm going to consider this right here my A, B, and a C, because I like to approach it from a conservative level where this right here made my 5 waves coming down, right? So this is now 1, 2, 3, 4, and 5. So the last thing you want to do, like I mentioned, the inverse also applies. Do not take your Fibonacci. Whoops, wrong way. Do not take your Fibonacci for only wave 5. You gotta take your Fibonacci, 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 all the way from waves 1, 2, 3, 4, and 5, just like that, which is all of B. That is a really good question, Ryan Peters. Yes, I can do I forgot, guys. I just completely forgot. Sorry about that. Let me check it out. Crap. I just don't want my desktop to show, so I'm being so cautious right now. Just a quick review on BitConnect, okay? So BitConnect, last time we checked, it was at about 10.5%. It's actually gained about 1.5%. So it leaves me to wonder this question. Who the fuck is buying BitConnect? Who the fuck is buying BitConnect? I want to know who is shilling BitConnect, okay? Like, who the hell is buying BitConnect? I just don't understand. Yeah, it's pretty weird right now. Mohammed, that'd be wonderful, okay? She's coming with me to Thailand. I'm gonna drag her outside of Romania if I have to, okay? Val, I've even changed the way my coffee is made, you know? I told you before, guys, that I drink my coffee like how I like my women, which is not yellow or black, but very white. So I've even changed up the flavor of my coffee and the way it looks just for you, Val, okay? So, is that sheet you're using for risk? Yeah, Defang. I'm gonna link it at the end of this video, okay? I'll link it for you guys at the end of this video. If you actually go to my Twitter as well, you'll be able to find the very basic one as well. And if you guys want a really detailed one of my entire month, I keep a risk index, an index fund, I keep a low risk scenario, high risk scenarios, which is my baby. I sell that one for $1,000, literally. So you guys might be very profitable if you guys are bigger players. But for now, I'm only going to share this very basic one. So I'm just going to keep answering some questions to see how long this video will go. I'll go for about another 5 minutes because I've got my hamburgers in the oven, I think. Holy crap, I've got hamburgers in the oven right now. It's probably burnt right now to death, but I don't care. How do you target your stop loss? Well, a stop loss should be usually somewhere on a swing low, right? Or the most relevant area. So my stop loss, for example, for Litecoin is very tight, but it's at the point where I'm so profitable right now that I've raised my stop loss already. So think of the most relevant point, right? So it might be, for example, right here, right? Here's a pretty relevant point. It can almost be arbitrary sometimes. Well, not arbitrary. Okay, that's a bad word for all the professionals listening to that. You want to choose a region that has high activity that acted as a major support or resistance before. And these zones right here are obviously very evident, right? So my stop loss was around 157.5 just because I wanted to focus on minimizing my loss entirely, and I would have kept buying more and taking very small losses of 1 to 2% until it actually bounced, because you have to think of the net profit that you gain when you lose, and you compare it to your losses. So as it goes down, if you're taking 1 to 2% losses, say 3-4 times, you could be at an 8% loss. But in the final one, you might actually end up just, gaining a whopping 15 to 20% there, right? How do you know where to start your Elliott wave count? That takes a lot of experience. Elliott wave is not one of those things that is really recommended for a lot of newer traders. What I recommend for Elliott wave first is make sure you guys understand Fibonacci retracement, which I happen to make a really good video for that already, guys. So if you guys go to my Steemit, too soon. Moment of silence for my Steemit account. I wish I had my Steemit account. I'm so sad right now. Okay, I'm over it. Okay, if you guys go to my Steemit, you guys will see lesson number 6 and 7. It's close. Number 8 and 9, where I cover Fibonacci retracement, part 1, and Fibonacci extensions, part 2. Now, what I don't recommend is to go to Udemy and pay for this whatsoever, okay? I know a guy, which I will say his name, Superman. He actually charges people for a course that sells a course that sells a course that sells a course, just so you can access his course. This content is free for you guys, okay? I want to help you guys get to your next level of trading, so make sure you guys review all of these videos and put in a lot of work, So yeah. Hey, have you guys heard my joke about Walton Chain? You guys heard about my joke about Walton Chain? It goes something like this. This is a conversation amongst team members for Walton Chain, and then they're like this. Okay, one team member's like, hey, what if we purposely got caught for our rigged contests, right? Just so the price would actually dump before our Alibaba announcement. And then team member 2 goes something like this. Oh my God, Walton team, thank you very much for winning. Keep up the great work. That's the Walton Chain joke right now in the community. I mean, think about that. If that were actually true, guys, what if Walton team actually rigged getting caught just so their team members can actually buy really cheap coins and then they dumped it on us later, right? Doesn't it kind of make no sense whatsoever how a Walton team member actually thanked the team? Like, thank you, Walton team. Like, he's part of the team as well, And why the fuck would you allow your team who works, your employees on Walton Chain, to actually be a part of the contest as well? And then they came up with this fucking bullshit apology that the public ate up, and all the people that are shilling and probably holding from like 300,000 Satoshi, they came like just killing me on Reddit there and 4chan. They're like, wow, they said sorry. Okay, Walton team, I'm so glad that you understand really good ethics in a company now, okay? That you understand the basics of not allowing employees to participate in your own rigged election. Good for you, Walton team. Good for you, Walton Chain, okay? But I still love Walton Chain because my friend Mel, who's in Thailand right now, that I definitely want to go chill with because she's awesome and I see her as a little sister. Yeah, she's really into Walton Chain, so I'll be looking into that a lot as well. How did you derive 188 as a resistance point? Okay, 188 as my resistance point because first of all, you see this as a 382 Fibonacci level, right? That's derived from B right here. So that's how you derive that. And secondly, we're also seeing a fairly major resistance right around this area. depending on the time frame that you see it, right? But we do see an area that acts as a resistance, sorry, support, that will now be a resistance. Not only that, do you see the region where wave 4 territory is? Region 4 territory is obviously it's a pivot, right? Sam calls it a pivot. And this pivot point right here will act as a resistance because it was formerly a resistance before, combined with the 382 Fibonacci level, combined with previous areas before that were acting as a support, which now becomes a resistance. So these are how we derive some of these targets. And I'm sure that if we went to a 5-minute chart right now, we're probably going to see it fairly oversold, right? Or overbought, exactly. So now it's time for a slight correction. And just based on how it looks right now, it was very obvious this was going to do something. So very easy count, guys. Waves 1, waves 2, waves 3, waves 4, waves 5 have officially formed in here, okay? And now that we see that this has formed 5 waves, we should expect some sort of correction now based on Fibonacci retracement. A very common place would be a 55 EMA that it would target first, in my opinion, right? 12% to 15% of the time, it'll actually hit the 382 Fibonacci level. So I'm sure a lot of people might be interested in it buying into there. They'll be interested in buying here. They'll be interested in buying here. Myself, I'm just gonna ride this thing, right? I'm not too concerned right now because I'm more so going extremely long on it. I'll see how it plays out there. If it holds, great. I'll definitely buy some here, but not all, because you want to buy more onto strength on the breakout. So let's say that this does some sort of correction now, where it does waves 1 to 2, and it falls into one of these general categories. Well, the wave 4 is going to definitely go somewhere. Assuming that this is the bottom, we've officially bounced. The targets are fairly easy to derive, and let me show you guys, okay? So let's say that it falls to a pessimistic view, even of the Fibonacci level 618. So let's say that we get waves 1 right here, which is pretty much the top, and then waves 2 to over here. Now, a lot of traders will actually target this right here, okay? I was really confused there what happened. So a lot of traders will actually target a 1618 extension, which is the more acceptable way to do it in my opinion, okay? Much more acceptable than the way I do it. The way I do it is very pessimistic, guys, because I'm such a bear at heart. But the real way to do it, like Sam is a professional at it, he likes to target the 161.8 because we have to remember these rules that wave 3 is often the longest and never the shortest, right? And then we also use a very strict guideline that wave 4 will not retrace into the wave 4 territory. The wave 4 will not retrace into the wave 1 territory by more than a wick in a leveraged market. So we can expect a bounce to here at most. And then of course, depending on where it goes, right, we can use this with the double correlation method to assume that wave 5 is actually smaller than wave 3. And we'll target somewhere very relevant, perhaps somewhere a little bit lower than the 1-to-1 extension and slightly lower than the 261.8 if this one hit 161. So just extrapolating right now, assuming that it gets to this region down here, LiteCoin's actually got a decent chance to hit over $200. So this is how we're using extrapolation methods as well. So I hope that that helps you guys a little bit down the road. So I think I'm going to call it, guys. Holy crap, I've been talking for 53 minutes? Man, how does someone talk so much? That blows me away how I've been talking for 53 minutes already. Wow, that's crazy. Somebody stick it in my mouth for talking too much. So do you guys have any questions that I can try to answer while I still have you here? Of course, LTC Moon. Did you guys watch Sam's video? When Sam and I are on point and we agree on our TA, like this was magical, right, Sam? Sam, tell these guys how magical this was. The golden pocket with the 1-to-1 extension for ABC. Wasn't that the most magical thing we could have asked for? Like, wow, it was just so beautiful, guys. It was so beautiful. It was like a double rainbow. It was such a double rainbow. It was so beautiful, guys. Valen, I don't do any personal coaching because, one, I don't want to charge you guys for anything. If you guys have any coaching that you'd like to do, honestly, go to Sam. Sam's right there, Trading Double. This is the guy I'm talking about, Trading Double. Message him. He offers personal coaching and he's very professional, much more professional than me, put it that way. talk to Trading Devil. He does personal coaching and we'll be happy to, you know, you guys can, I don't know about prices, that's for you guys to decide, but my philosophy is very different, right? I don't monetize myself at all. I don't ask you guys for a dime. I'm cool. I'm 33 years old. I live in my own condo. Everything is paid for. I'm just here to help you guys succeed now. I'm more so just screwing around on my own time, sitting on in my underwear on a Monday morning, talking to you guys. Hold on. Was it Monday? Friday. You guys almost had me there. It's actually Friday, not Monday. It's Friday, okay? Just so you know. So yeah, like I don't monetize myself in any way, and I'm not looking to make money off of you guys, you know? My dad was a teacher, and I just want to see other people have the same kind of success that I've had. So yeah, I think I'm going to end it right here, guys. I'm a little bit tired now. I got to go get some more coffee, and I got to go eat my hamburgers, and I just wanted to give you guys a really detailed video of a basic and detailed video of risk analysis combined with win expectancy formulas, combined with, you know, flipping a coin scenario, deriving targets with Fibonacci extensions, and these are the kind of things that you guys should focus on winning over time, okay? Or focusing on to learn to win over time. WXY, that's a very difficult topic, okay? We're not going to get into WXY and Z, but I love WXY and Zs. They're my favorite corrections to learn. Because, oh man, if you guys can get Elliott Wave ABCs, and you learn about the ABCDEs, and you learn about the WXY and the WXYZs and the modes of failure, life becomes really easy when you start to learn about Elliott Wave. I firmly believe that Elliott Wave is the least value tool in trading because it's also the most difficult thing to learn. But if you can get over the learning curve of Elliott Wave, like, don't get me wrong, I've got a lot to go. I look up to Sam. Sam is definitely one of my idols that I learn a lot from, and you guys should always strive to learn more and never think that you know everything. Trading is a lifelong process, and if you focus on winning, do not focus actually on winning. Who cares about winning? Who cares about money? That's the least of your concern. Focus on good trading. Focus on good trading with high probability setups, with very low risk, high reward scenarios. And if you focus on these things where you can become a better trader, then the money will actually just be a bonus down the road. If you guys have been following me since last year, like October, November, and you guys have seen some of my calls, right? Who cares about the money? We just hunt for these high reward, low risk setups. Yeah, I'm all self-taught, Will McNamara. All self-taught. I've devoured videos on YouTube. I've devoured books combined with my engineering background, mechanical engineering background, my math background as well. It's definitely gotten me to a level of wanting to be good. And you guys need to understand that you're competing against very talented people in the market. And these very talented people are there to literally take your money. I am here to take your guys' money. The money doesn't come from thin air when you win. And when you lose, someone has literally robbed you out of your pocket. So if you guys want to become a good trader, you got to be better than the next guy. Otherwise, you're competing, you know, no patting myself on the back, but otherwise you're competing against some of the brightest people in the world. Like, you can be playing against Eric Cho, you can be playing against Sam, you can be playing against Johnny, you can be playing against me. So if you guys want to propel yourself to the next level in trading, you got to be better than the next guy. And you also have to focus on removing your emotions in the market. And how do you remove your emotions in the market? You focus on risk to reward. That's what you do. So yeah, so I'm gonna end the video right here. I think it has been a very long video already, right? And I'm just gonna show you guys my background picture really quickly, all right, of what it is. Psych! Have yourself a great day, guys, and I'll be sure to stream live later. So I hope you guys are enjoying your profit right now. Please focus on laddering some of this, right? Always focus on laddering your buys like your profits as well. Make sure you guys understand where these resistances and supports are. And other than that, have yourself a great day, baby whales. Mama whale's gonna go eat herself some plankton. So it's been a pleasure talking to you, baby whales, tiny little dolphins, and mini little penguins. May you march safely. May you march safely, you march of the penguins. Have a great day now. Bye.